So I will show you markets that are 20 years old and more, and that are still perfectly healthy without having that kind of shape that is so scary for many people. So let's go again to this consideration here. This is market versus trend. And this is a fundamental. As you can see, you have a bear trend and an uptrend, a bull trend, bear trend again, and market generally in stocks. If you see that they do on crypto, consider that it's not pragmatically possible to do the, let's say, point, I don't know how to call them in English, but the Q1, the Q2, the Q3, and the final point where you have the cycle of the bull market. You have, let's say, checkpoints that are the points where you take profit, really, because it's in terms of Fibonacci, these are the three main retracements of the initial part of this trend. There are more, because on crypto you can have a really long uptrend and a bull market, and you will have to split this. It's not like the stock market that is related to, in example, each 3 weeks, the first 3 weeks of the month are good for options. On the third Friday of a month, options are expiring, so they are liquidated. And this is why it is a cyclical move. In crypto, it's 24/7, so it's market psychology. These numbers are not really real because it are based just on move of the price that is related to what market makers did in the past. What we said earlier when we started about the alpha coins, Solana, XRP, and others that are completely disconnecting, like Ethereum did, they are generating dominance for their own money, their own price, their own resources and infrastructure. So they are practically doing their ecosystem. They are building that. And it will be for Bitcoin something that will change the strength of the price. And market makers are not really on ADA, Solana, XRP, and Ethereum like they are in Bitcoin. On Ethereum, they start to do the same practically, but you saw that Ethereum drove the whole bull trend of Bitcoin starting first. So that was the EIP, the many other things that we have to consider, but not just that. So the logic of Wyckoff is, he was Polish, so it should be Wyckoff, but let's say Wyckoff. Starting from the accumulation, going to the markup, never forget that we are not doing markets on accumulation and distribution. That was possible when Wyckoff established the theory, and it was in 1940, I think, I don't remember. But it's not now, not the current markets. Maybe up to the 70s, it was something that could be considered like acceptable. But then we need to evolve this market to many phases, like the markup, markdown. The markup here can be more than one markup, and the markup is very similar to accumulation and a distribution finally, and similar things on the markdown and so on. So this is a structure that here is drawn in parallel, but it's not parallel. Generally it's ascending because markets are ascending since the 3 or 4 centuries. Also, there are people that are telling that market will go to the level of 3 centuries ago. To me, it's quite impossible for many reasons that are geographical also. So let's go to another thing, this one. don't be fixed and focused too much in this shape, because this is an adaptation of something that I will show you soon. This is another one that is quite the same. As you can see, it's the dead cat rally, similar things that we are living now in the Bitcoin chart. But let's go to the real meaning of all of this. It's this one. We start from optimism, we go to excitement, to thrill, euphoria, then we have the maximum financial risk point. And this is called generally all-time high. This is the maximum financial risk. For that reason, I said, when you go for ADA trading or Solana that are going to the next all-time high, consider that it will be the next one, not the same one. For that reason, a trade entering at thrill and exiting at the all-time high is a good trade. You can establish that you want to exit 50% at the first all-time high, a correction, and stay with other 50 to a second option and a third one. Generally, they are, depending on the impulse, up to 5 or 6 retest and attempts on all-time high on the spots that are like Solana and ADA, driven by people. After that, you have anxiety, denial, fear, desperation, panic, hopelessness, and the bottom. It's the bottom, the maximum financial opportunity. This cycle is a cycle of market emotions, and sadly, many people transformed the chart, just reducing this important market emotion cycle to a whole chart. But this applies also on a 15-minute time frame for just a day, because it depends. So let's consider this cycle. We have going to the image, we have optimism, excitement, we go up, we go to the maximum points there, then it falls down, and it's like the same. You have to focus on this cyclical sentiment that is related to the real market. So don't look at that shape like something that will generally happen and it will be that way because we said. I just see one thing. I don't care about the all-time high and everything like that, but my trade is slightly going to win something. So just look at it. My trade that I don't trade it because I just talking to you and I already have Solana is good. This is what I'm interested in, not that curves and disasters. And I'm interested also in the fact that the volatility is decreasing. This means that on lower time frames, I will have less oscillations and possibly the strength of the impulse owned by Solana will be not so heavy to go to the all-time high. But I have a trade here, so I'm happy about that trade. And I go to Ethereum. Another alarm. Let's see if it's ADA. No. But look, what we said earlier, ADA was on a red candle. This was a sign I was waiting for. And now this is an hourly candle opening. The previously was green. The next one is probably turning to red because it's what they do at the beginning. They use the liquidity area for 50 minutes and then at the last 10 area they go up to the profit. So they, the makers, the movers, the bots, the algo traders, because it's that way that it works. So if you want to buy something, wait for the hourly candle to close or to be near to the close position before entering something. And if you are trading on 15 minutes, do that on the 15-minute candles. We are waiting still for the weekly one. Now, looking at this chart, if someone said to me that we are going down, I will punch heavily his face because he needs to be punched. He's just causing panic. This is not a going down. This could be a going down like this one, but this was an all-time high. So the probability that this will go down here is quite low. It's another thing that can happen considering the previous edition is this one. Let's look at isolating the concepts and consider these three candles. I will take out all of that buzzy lines that we don't need at the moment. So the past all-time high, because I need to justify my trade. I don't want to be trade based and justify my trade, but I want to find reasons to avoid exiting this trade. So I can do two considerations. The first one is that we are going down, and I will replicate my rectangle and I will move it here, and I will consider that we are going down. So if we are going down, the next weekly candle should comply with this big red spike, but not just on Cardano, also on Bitcoin, because this is not a move of Cardano, it's a move of the whole alt market. So at the moment, my probability of finding the same there is not evident, but I wanted to spot three candles now, like these three. I want to use just these three and to get a proportion. So at this point, my three candles, I can reduce this, and I can see that the move is something that is not combining in terms of proportion. So I will do another thing. I will delete my rectangles and I will measure the volume in these operations with this fantastic tool that we have, date and price range. I want to use this because I want to measure the price range and also the volume. So I will start here about, and I will measure up to here, to the all-time high. And zooming a little here, I will see that that was in 14 days a move of 129-130% for a value of 13.9 billions of ADA. Let's see in this bear move, the bull move, sorry, how much is my current volume. Just to be sure that I'm not exceeding. Well, the volume is obviously a little bit less in terms of percentage, and in terms of volume is a little more than the half. So what it means is that if my trade is successful, it would take this for about 40% more, so going to 160. And this is exactly in line with our trading on Solana and everything. It's the same line. So I want to beat, to take a risk on this trade this week. This next week is a long week. It's not a bear week. But I also want to look at one thing. Someone has a microphone open. Pause. So, practically, the trend that I'm taking here or on Solana or wherever, look, this trade, is good. I'm taking a good trade. I could reach effectively 58. Now, we have to monitor, we have to trade the stop loss because we want to gain at least 1%. But as you saw, in a non-action moment where everything is going supposedly down, I'm taking a trade that now is earning 1%, not leveraged. and I could move my stop loss a little bit way down, but considering the average true range because it's said to be kicked out, or I will wait for this yellow line to be reached and then wait for the next candle to move the stop loss to the first one, and so on. I'm trading, I'm enjoying, and the market is supposedly crashing, going down. Look at that down. This is a down that I would say I would like to see each day, this down. And this down, casually, we are on daily, let's go to daily. To daily time frame, this down is complying with what I am expecting from the next weekly candle, which is confirming my green move and not denying the trend. So the weekly candle probably will open red as usual. The daily one will close green, possibly, or red too, because it's psychology. But I'm fine with the red candle because I want to, I already had my sign. The 200 moving average retested, and now we will start here. So it's another time that we start the week up the 200 moving average. This is a sign. If you want to see that sign, you look at it. If you want to say that we are going down, personally, I will not follow your advice because to me, we are going similarly to up or sideways, but not down. And this way, I have my week orientation planned and I will look for confirmations, I mean, higher high, higher lows, and so on. And I will look also for negations of this. And when I see negation, like I saw here for a moment, 1 and 2, I look at them and I say, okay, it's a negation on this little interval, but this double bottom here is way lower than this recheck here. And this is strong because it's more than a triple bottom. So this double bottom was bearish crab, but it performed bullish. So patterns sucks in this case. The pattern sucks. It's important to see that I'm working on market psychology, and as time goes by, each Sunday or Monday, it's a need that we discuss these points. Now there are these points to read about. I will pin this image on, or I will start having a blog with what to take in mind, because you cannot look, this is also the same with another curve and other nice faces, but you cannot focus just on this move because it's just a way of scaring you. At this point you are not scared, but look, this bull market here is with full of corrections that are not this way, because the bull run generally is a bull run. It's very hard to spot this to take profits. I think it's the most important part in a bull market is to take profits on these important steps, and it's the hardest part. So many people decide to enter here and hold until the end of the bull run, saying they are long-term investors, but bad investors because they lost the opportunity to compound their money here. In this curve, we are lacking that kind of trick and the tricky parts. But price time, here we have something that is real, and that is the price expansion generally is always going to prosperity. And what I said earlier is just related to some markets that I want to show you. In example, looking at a title like Berkshire Hathaway, why not? BRKA, which is a title that is on the market since so much time. We go to 12 months because it's an old title and we will start from 1980. So, where is the fall? 12 months. Let's search for those kind of curves. This is from 1980 to today. Okay, you can see that we have, of course, correction. But look, let's consider that we have to set some markers. Crashes related to big crises like 2008 here. This is not something normal. And 70 here. No, 70 is for JP Morgan. 1987 here. These are important market crashes that verified for many conditions in the world, more political rather than economical, and the COVID here. So this is logarithmic scale. Let's go for normal scale just to find what the curve is signaling you when you see the market sentiment. And let's see that always can happen that in a bull run of a bull market, you can have the same shape, but you will go up again. And here you have the same kind of, look at this distribution like Bitcoin. I'm on monthly time frame. Look, this is the distribution of Bitcoin. Falling down, retesting, and look at the retest. Instead of falling, it's going up. So the analysis that is saying that generally you have to go down after distribution and retest, because this is a retest here, since it is a market on a weekly basis based on festivities and days that are closing. These are pre-market, post-market situations that are related to specific share and stocks conditions. If we go to daily, we will have more gaps. But what I'm focusing here is that we had the distribution phase, we had the retest phase here. It's obviously it's different, but consider this. We are going to retest here. Maybe we will fall, like people are calling the doom, and the doom, instead of being the real doom, down to 9, could be this one, the bull run. And this could be the bear trap, not the bull trap, of a really long-term bull market. Like in example, Alex spotted some times ago, he drawn the other case of this being a whole bull market in Bitcoin. So as you can see, the market is not going up and down at the same point. This is completely wrong, because we will not be prosper citizens, we will not have prosperity, but the market is generally, if you don't have a crash in the economy of this asset, not of the whole market. But obviously, if Berkshire Hathaway, we have Warren Buffett not doing anything. He is nephew, I think, is driving the company, stopping, and the company going sold off or closing. This will be a curve down to zero, of course, but it's not related to a market. It's related to an asset, and an asset is doing the market. So to have in the whole market the crash that we are mentioning in the stock market, we should have all the stocks going down. I mean, a nuclear war destroying completely the planet, alien invasion with aliens not permitting to rule the economy anymore at the same time. What it means is that with this example, We are thinking about a leader of a market, which is named Bitcoin, and we are thinking also at the fact that the dominance of this leader is broken. On Ethereum, is broken on Ethereum because Ethereum is completely disconnected and drove the phase. Is broken on today Solana, XRP, and ADA, completely out of the context of what was the dominance. If we add another thing like the US dollar index, we have to consider one important thing that is related to something I will go now on the heat map. This important thing is that we have here Omni tokens or stable coins, USDT, BUSD, then we have the DAI with the euro and many other coins. These are not really always quoted like the dollar. So we have fluctuation, we have oscillation in the price of the USDT that is going from ranging, as you can see, this green, from ranging up to $1.06 down to 0.901. So also the stable coins are oscillating in a very, very compacted range, but it's not so uncompacted. It's something that is very different from the behavior of the real dollar, because now I buy one USDT with $1 is 1 to 1, but in this case my USDT Tether was valued $0.9. So today I'm winning, if I bought here, $0.1, which is something that is very important to consider when you look at the index of the dollar, because it's not anymore an intrinsic value of these coins. It is something that changed with the fiat and the euro also, because now you can buy Bitcoin in euro, and in Bitcoin there's euro too. There's not just dollar. So that composition, we could draw pie chart of the composition of each coin. No one do this, but it should be time to do that. And if someone has the knowledge of analyticals and statistics, should do that kind of research, because Bitcoin is not just Bitcoin anymore. It's dollar, it's USDT, it's euro, it's all other fiats that are available in Binance, it's Ethereum, it's all the other coins. And all the other coins are Bitcoin, but they are also Ethereum, because Ethereum was paired to the coins 2-3 years ago, and the USDT and the fiats 2 years ago. So now it's time to consider that all that dominance that now is here 45%, it's completely a wrong number. Things are changing. That number, to me, after seeing the performance of ADA, XRP, Solana, that are infrastructured coins, so they are like Ethereum. They have a smart contract network with simulation of many testing contracts and transactions and many services that are run on their own infrastructure, and they have lower fees than the first Ethereum version. So the whey or gas that you pay on Ethereum network here is cheaper on XRP, ADA, Solana. Why Doge? So stop looking at stupid tweets. It's not because of Elon Musk or Mark Cuban. It's also for that. But Doge has a hard link with Ethereum since about 2 months. It's an unofficial news, but if you look at the Ethereum official documentation, you will spot the dot there. I have more details about that on the technical side, and I can assure you that Doge is directly linked to Ethereum as the first aimed money to be used for gas fees on Ethereum 2 network. So it's practically the same of Ethereum, but without infrastructure. And Doge is a fork of Litecoin. So when you see that Litecoin is at $184, consider that Doge is consistently underestimated. If you want to do a good investment long term, you could buy Doge. Maybe if it goes down again to 0.18, which is possible because I did a macro technical analysis on our channel and I set an evidence on what is the pattern replication of Doge, and it's effectively something that you can find to 0.52, I think, for the next higher goal if the market will not crash. So every consideration of this, also this one, Rev. What is Rev? Yesterday I found this Rev when everything was red. Rev was heavily green. And the other one that I will add also this THR, but the other one was Dent. So let's go to check again Rev 0.01. This price is very interesting, so much interesting. So I want to see the chart. Is a scam chart? Let's see. Let's go to TradingView here to see this coin. It's what you have to search when you are not considering to trade because you are scared about market. There are many things to do as a trader, and not just as a complete trader, but as a crypto trader, to look at something like this. Now, this bloody site is not answering as I want, so I will go to Rev in TradingView because I want to see if this is a scam pattern or it is the real coin, altcoin shape. And if it is, this is a coin to invest on, like TRX, which is a 0.08. I bought TRX at 0.01 and I sold because I wanted to sold at 0.09 the last week because I decided to close the position. So you can imagine that my investment on BET did here on July of the last year paid very much, and it paid because of this. But its potential is here. It's 0.21 and more. So you can imagine that this is a coin to buy, not the Doge, SHIB, or whatever. These are coins that already were at this height, and this is a transactional coin, not just. And Binance is paired to XRP, so you can trade XRP with TRX and vice versa. These are things to do when the market is uncertain. And when waiting for candles, consider various options. Look, 47. The bears are eating their nails because they were thinking that we would have been going to $40,000 this Sunday. No, it's not that way. The price is going up. And although the market cycle should tell you that in the past the price went down, at the moment the signs are not pointing down. If that happens, and I'm the first one, I spotted some similarities on the, let's go daily time frame of Ethereum. Let's remove every line and let's go to check the past. Look at this scary past. The retest is here or could be here, but after the retest, the result is at this point, 1200. Will it happen again? Well, at the moment, we don't have the signs that were here, 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 and here. We are on a green wave, confirming the uptrend, correcting as it has to do, but I would think more to something like this move. Let's see, one, two, three, four, five, six. Let's do the honest consideration, and then why not? Why not considering the correction? Okay, let's consider big correction, but let's consider another kind of move here. But why I have to consider this? It's an impossible move for market makers. They will give you the same short they gave you here when nothing was expected because no one exited here. Many people bought at 4,000 and are still there waiting for 1,500 holding. So they did it good here. Are you thinking that we will do the same when you expect it? No, they will not. They will probably follow your uncertain sentiment, but you have to be certain of one thing. If market is going up, you will follow the market. You will not go waiting. Go up with the market. Look, when we started the video, the last one, not this one, this red line was way contacting the candle. So this is the weekly candle that will close in 13 minutes. And to me, the weekly candle in the last day is important like the last hour of the daily candle and like the last 10 minutes of the hourly candle. Just switch to time frame, to lower time frame, to see on 1 minute how a candle that is constantly moving up and down, up and down, up and down, perform on the last 30 to 10 seconds. It will give you the orientation. You will see that it's still wicking up. So it's still giving an orientation, a price action. Look here, the wick is very reduced. It will be reduced at the end, probably. In the last 10 seconds, we will have reduction because we already have the wick. But how much? Not going, probably red. Now it's closing. Next one. Hammer to down. So a red. Obviously, they have to confirm. But red, always, look, the shape of this is was a cross, a shooting star. Now it's something that could be a next three white soldiers because it's quite perfect. Let's see. Now hammer, boom. As you can see, this is something that you have to watch in pairing this timing. So I'm interested in the last 10 minutes. Look, the move. Correction. I just have spotted the wave number 2, number 3. Of course, it's not so terrible because it's just 4 minutes of red price action. So 3 in this case. Let's see. 4, 3, 2, 1. Close. As you can see, we had a spike, but in the last 10 seconds or 5, the decision was not for 4 candles obnubilated or destroyed, but just 2. So this is important to consider when you consider the daily close and the hourly close and the weekly close and so on. Look, the daily close now is at 28 minutes from closing. And apart of being a hammer, that was a hammer on red, but it's a hammer always earlier, it's still a little bit under this red. So to me, it's very important to add, in example, an alarm here, because I want to know if we reach that red, we are going to possibly engulf the other candle, and it will be in 27 minutes. This is something I have to look because it's daily. And weekly, I will check that later. Look at my alarm here. It's complying also with weekly needs, and weekly will close in 27 minutes. So we are near an important moment. Weekly, daily, why not hourly, but not so important. I want to see where the market will point and go. So let's go to see. Oh, look, my trend is losing now. My trade. Uh, nice. I have another confirmation that this ATR is decreasing volatility, so the price is going sideways. And my trade that I started at the top of ETR should be the opposite. I should start the trade at the bottom because from low volatility I will search high volatility, never search the opposite. But let's say that I was trading for a market trend. I don't hit my stop loss at the moment, so this trade is opened. But if I want to go on a long term and I know that this week will be green, or I suppose that this week will be green, I prefer this stop loss rather than this one because look, we will check this trade in the future days or hours, but I'm quite out because I entered here about and two times I was on the point to be kicked on stop loss. And to me, being stop loss here or here will not change my life if I'm in the trade. But if I got kicked, it's something that I should work on and tune. So at this point, I think that we have just to cover another final consideration that is related to two geopolitical events. One is the problem that raised in Afghanistan. What could happen? Now we are not talking about the market, we are talking about geopolitics. First of all, an earthquake in Haiti. If earthquakes are natural events, I don't know what HRRP antennas are doing in Alaska. Maybe someone is trying to manipulate the frequency of Earth and oscillation. Maybe yes, maybe not, I don't care. The point is that in IT we have an earthquake, and for 30 days they called the state of emergency with NATO and also the United Nations going there for help people. So that imply costs and market sentiment affected because there will be more shares related to medicals and similar things that will go up, and others related to peace that will go down. This is one point. In a little move, but it will be that way. And since the money on crypto comes also from wealth of big institutions, if institutions are focused on IT earthquake, maybe they will be less present in the market. And this will be good for algo traders because they will recover the control. So we can think that if we have market gaps, an earthquake in IT could destabilize the real, let's say, market behavior for the next week and on crypto, and causing more control to the algobots, so to the market makers, and they have gaps down, so they could go for their gaps down and reduce a little the wave. The other point is the situation in Afghanistan. When this is something that United States Army and ONU, United Nations were there. I think one or 2 months ago they left completely. I'm not sure. I should check more news, but it's not so long term in the past that they left completely from those sites. So now one could think, okay, the policeman has gone and the thieves are again out of their caves. I think that the police has gone because he passes the power to the thieves that were in the caves, and they worked together. So I think that Taliban's are controlled by United States in some way. Now we can have a discussion that is political. I'm just giving you my point that is related to what happens generally in markets when we have this kind of situation, like the instability in United Arab for the missile that supposedly Iran threw to a ship of Israel. And I don't know whatever more fad in that case they are pointing and fake news. But in Afghanistan, there's instability. And although Afghanistan is not controlling the market because they are not a power market maker, they are a catalyst for situation that involves military troops move, instability, fear from other countries. If one is Afghan and is living in Europe or in France, in example, they will consider him a terrorist. Many people will be affected by this kind of mood, and this will affect indirectly the market too. So the more events are on for geopolitics, the more we can look at the market like something that can change. It's like an indicator that can be a trend reversal before every indicator turns on in the charts, because it's something we have to take in mind. Now, are they planning some kind of driven crash? Because at the moment I said we have green signs, we have bull signs, higher high, higher lows, trend confirmations, on little time frames, reversals and re-reversal and confirmation. So I have market move which is pointing up. Where could be my down in the market? Not in charts. So I need to be aware of what's happening all over the world and consider that that kind of moves, of political moves, are driven also to affect economy worldwide. And an example is the oil crashed 1 month ago or 1.5, I don't remember, maybe 30 days ago, but the gold was stable. So they crashed the gold because they have to go paired. There are interests that are related to petrodollars and oil dollars, or how they call it, that are linked to gold. So gold cannot stay up and they have to drive the price down. Bitcoin is quite the same because it's involved in many investments related to ETF, global funds, everything that is effectively built on top of Bitcoin and its dominance. There are also Ethereum funds, Zcash funds, and many other coins funds. But the real thing is that they are based on Bitcoin investments. So the point is that big investors are still putting their money in Bitcoin and on 30% on Ethereum. The alt market is still something that is more oriented to the people, and on ADA, XRP, and Solana, we have people that are gaining power on that amount of capital. So what could happen? Really one thing: institutions, market makers, and the other guys that are involved in Bitcoin and Ethereum will not permit to lose the power on the other coins, so they will enter brutally the ADA, XRP, Solana market and rising up the price. That could be something that is like a reset. The price started here and maybe one day will crash again here because they start playing the game heavily on XRP, ADA, and Solana. But they are still out of that game. So if you want to enter that game, you are not doing a bad consideration. This is still a market that can grow 3, 4 times, especially ADA and XRP. And XRP is a little bit not faster, slower than the others, for the reason that we know they crashed its opportunities with files and problems with American laws because they probably wanted to enter. So it could be a little bit more corrupted. It could have more presence from those big entities. I know for let's say unofficial sources that there are many people that have the citizens of Vatican investing in XRP. Now I don't say that the Pope has the XRP in his wallet, but there are many people from that state, little state and country, that has an investment in XRP because they have bank accounts in Switzerland, and XRP has also a big presence in Swiss banks. So this is a warranty of something that is controlled, but it's a little bit far from the other guys, because let's consider the amount of percentage of money remaining for XRP to go up. I will get rid of all this fantastic art, but useless in this moment. So my XRP price is still quite far, 26% from the all-time high. 26% more because I have an indicator here that is taking me on the bad path, but here 31% from the all-time high, while we already measured ADA is quite there. I think that's 12%. Let's see. Price range on ADA 8%. Way better than yesterday when I checked. It was at 12%. So ADA earned 4% in one day. Solana, and these are all things that when you are scared about the current moment and what to do, you should do, because you are not losing time doing this kind of activity. You are integrating your data and strategy, and especially avoiding the trade that could be something very risky, or taking the right one. 5.59. It's impressive. I mean, everything was dumping yesterday and today. When opening the day, Bitcoin and Ethereum were going down. ADA, I remember yesterday I checked at this moment, in this time, it was at 12% from the all-time high. It's at 8%. I think that with this view, you have a strategy for your week. And if it's not trading, because you're scared of that, about trading and so on, and it's more oriented to look at what people are saying in our chat, and looking, why not, at Twitter, because it's full of similar stupid things that you shouldn't look too much at it, but counter Twitter your trades and you will win. There are no people on Twitter that are giving you the right wide information like we do together in our environment, because we share something that I think and I tell to you, and then you tell to me what you think, or you write. It's an interaction, and I give you some thoughts now, but during this week the exercise should be to answer my thoughts, not to check if my trade go up or down, because maybe I will want the trade, but not because I'm good, because the market is up and I just follow the trend. So do the same. Think about your strategies, have a counter idea or the same idea, confirm the idea and say to the others that you are agreeing with my concept on these points, or you are against my point and you say to the others and to me, and I will not be upset. I will be happy to discuss, because if we discuss that this is a mistake, I will fix it. But if no one spot the mistake, one day it will materialize in a tragical way, like when you build a house and one component, one really short component, maybe a tube or something like an inner component of the building is in defect, and you spot that when the building is up and people start living there and the building crashes. And that is something that happened many times. So instead of leaving it happen, let's go for talking about every sensation that you have, not just up or down. Should I enter at this level? It's nice and happy by my side to answer you with entry points and everything like that. But why don't you say to me, I would like to enter at that point? Can you check if that point is good? Because it means you just have a way or a view. I mean, let's remove everything. I see here the price 12831, and I see this price and I say, Fab, I want to enter at 12831, and my stop loss will be at 12603, and my take profit at this point. Is it correct? I will say, I check. And I will give you my view, but not my rule or my law. My view, which could be wrong, but could be something that you integrate with yours. And if your stop loss was too low, maybe changing it a little more, because you see that I'm saying let's rise up the stop loss, will let you stay in the trade and you will win the trade just because of that. Because remember that the trade you win just not just setting up the trade in the correct way. You win also with little details like the stop loss correctly tuned, and if you don't tune that stop loss correctly, maybe it will kick out your trade at the point that would have been nice, just losing it 1 point or $100 in terms of Bitcoin, or here 1 cent. Just 1 cent could kick you out. Look at this candle. This was the candle that we considered earlier, and we are 9 minutes from the candle that will give us the real answer. 9 minutes from the weekly candle. When you see people that say, I don't know, I woke up just to see the green candle or the weekly close. Well, if they woke up for that, they wake up for that, and then they go to sleep again, maybe better to keep sleeping, because if you wake up for checking the weekly candle, it means you have a strategy on where to go depending on how it closes and how the new opens. If you go again to sleep, you are hoping to dream about a new strategy. Maybe it's always possible, because our brain is very complicated, and maybe it's a strategy that too. But if you wake up to see the candle closing, please do something. Don't go sleep after that, because going again to sleep, it's interesting, could be a strategy. I mean, for dreaming the next ideas, why not? But generally, dreams in many cases are exactly the opposite of what you will experience in your life. In example, this night I was dreaming about Bitcoin at thousands today. But why? Let's go to a Freud analysis, but no, because it's too much time. Really, because everyone is calling the doom and my brain is considering that opportunity. But at the moment, if I look at the candle that is closing our week on Bitcoin, it's not going to $1,000. I will check because I'm sure it's not. It's not going to that level. It's to 470626 on 47. So what I'm looking at the moment, when I look for the weekly, I'm looking at the round number nearest my opportunity for this week. So 6 minutes to confirm 47 or to negate it. Now, generally, if we look at the other candles, look at this, 43.8, it's a 44 negated. 39.759, it's a 40 negated. And here 35.2, it's a, no, it's a little bit more. Let's see precisely with the correct. Higher is 35.398. And this is neutral. I don't see a round number near, it's a 35 not negated. But in all these cases, these 2 weeks, what happened is that my close of the candle on the C was 43.794, 39.845. Here I am at 47. If it closes below 47 on 46, I have a consistent confirmation of what happened. While if it closes up and confirms the 47 in how much? 5 minutes, this could be a bearish sign. Incredible but true, because I always closed a little bit lower the round number. So let's look at here, the C here, and let's look at this candle first. Well, this we said that it's not important because it's neutral, is the trend reversal, but the first one was 39.845, failed attempt on 30. 40 was not achieved. 43.794, let's say 43.8 not achieved, but let's say 44 not achieved. Here we have 47.049.6 changing. So in 4 minutes we will see how it closes. To me, if it closes on 4.6, it will be something that could lead us to 50. But if it closes to 4.7, I will activate some alarms because it's closing too high. So sometimes you have to spot these little differences and sharing with the others. If you say to me this one or the opposite, I saw that in the past because I researched, in these cases closing a little bit high was a strong bullish sign. Perfect, nice. To me is something interesting, but it's an anomaly compared to the other weekly behaviors. So sometimes these 4 numbers are very important. Don't consider them, especially on weekly and daily, because they are giving us the sign of what is happening. Maybe it's a little bit overestimated, 47.05. Maybe it's a good sign, a bullish sign. I will know it in the next 24 hours because I need the real action of this price and the move. But I have 3 minutes yet, and in 3 minutes the change of $50 could be something that could leave us with open mouth, but could be interesting. And if we go to Ethereum to do the same, it could be an exercise for you, but we do that together. We are now here, and we remove every buzzy thing. We check always the close for this I have many spikes here, so Ethereum is quite hard to determine. But let's see, the close is here 2.5. Here is 3. So here I would expect a 3.5. It's not 5, it's decreasing, but the closing was always, in this case, 2.556. So $50 up. And this was $14 up. And this is 9. So it's not 3 and 500, but it's up a round number. So in Ethereum, it could be a confirmation. But if it closes at 3,200 in 1 minute 45, then it would be something to think about. And today, since this new week that we are going to close now, we can consider that Solana, XRP, and ADA are the same company. We have to start looking at that candles to establish our weekly interest. Not like the others, but at the point that we are closing at 2.16. So more than 2. This is a very important goal because ADA was looking for 2 since so many times. You know that 2 was a goal that was achieved once and not repeated. So ADA is closing way up to 2.1. This is a strong side of power. And XRP, let's go to him or it. Well, it was already here many times, so this is not yet a very important point for XRP, but let's see the round number is failing the 1.3. So I would bet a little bit less on Ethereum. 23 seconds to close. Solana is outperforming. We know. Let's move the ATR and go for weekly VR and go to check. Solana is at 53.5, increasing. I would say that, to me, now it's opening the new candle. So generally you will not have results for the first 12 hours, real results. But in our case, let's go back to Bitcoin to see. 46,973. Perfect. So it complies. Another bullish week. As you can see, in the last moments, we were on 47. Look at the importance to see how it changes in 20 seconds. Not a joke. Not because I have spotted that. I have spotted that since I trade. But remember that the importance of the weekly close could be sometimes, for many people, useless. And they will show you their fantastic charts with colors and bullshit inside. But the main point is that we are closing $27 under 47, which is in line with the previous 3 white soldiers candles here. So it's a strong bullish side. I am bullish for this week. Maybe it will be a bullshit, but I don't think so. I have signs that you can confirm and start thinking on and think that maybe let's look at Ethereum. Close 331, 310, always 10. In this case 56. So here I'm still bullish because we closed above the round number like earlier, while in Bitcoin we closed below the round number, which is confirmation of precedent behavior. On our friends here, we closed way above 50, and I think that 50 was a goal, yes, never achieved earlier. So just the day that we spotted the week that we had the all-time high for Solana, which was here on May 17, we had a similar up result, a close price, not a close price for the weekly, but a close price like today, at 53.3.5, a strong sign. But let's see, because this 3 could also be a correction to 50. So this red candle, we have to watch at it, because this could be something that is overestimated on the 50 points. And in XRP green, you can see these little differences. XRP ADA going up on the new weekly open, while Solana going a little bit down because overestimated. Let's check here this candle. 128, the close price was under 1.3, so underestimated. It's now compensating. ADA was 216, it should have been 2.2, compensating. This was overestimated. Bitcoin is confirming, Ethereum too. So at the moment, I think that we have 2 hours and 10 minutes recording for all the people, which is way more than what I thought. I was focusing on, I was intention to focus on this kind of, let's say, meeting. But I think that for a first part and a first idea on how to search for strategies, not just looking at charts, but at news, at interactive way of looking at the cycles like this in images that you can find on the internet, like this one too, which is practically what should happen to Bitcoin. Fuck, we don't need this kind of stupid influence. We need influence like this one. I am on Ethereum and it's fighting because it was a little bit up with 3310, and now it's exactly on that point, so it has to confirm that, and it will maybe do during the week. But I have signs, I have a strategy, I have found a way to start thinking to my trades, to start searching for uptrends and negations of uptrends, to find higher high and higher lows, generally as a must, and to activate my alarms if I find higher lows or lower highs and lower lows in the trend reversal inversion. I have here a spot of this shape, which is a sideways, but it's also a sign of something that is reverting. So it could be the reversion of this trend, and it could be something that start pointing down. Like here we did this move, we could have the same inverted move, so start going down. But in that case, how can I, let's say, start searching for it? First of all, I need to be sure that I will not score. This alarm was and is still not activated, but I will move this alarm at this level a little bit higher. In example, this was a higher 3334.45. So I will change my alarm to have a 3335 round number. I want this number to be crossed to know that I am on a new higher high. As you can see, very slight difference, but on charts this difference are, because we are on 1 hour, let's go to 3 minutes and you will see that that difference is way unpredictable, but it's there. And if we go to 15 seconds, it's different. I set just, let's see, 3304, and I'm looking for 3305 because of the decimals. It's important. It's just the meaning of a new, slightly unpredictable and almost hard to see move, but it will tell me that the uptrend is confirmed. And obviously, if we go upper, it's a confirmation. So this strange shape would not confirm the option of having a pattern like this before reaching that point. Just before, start doing something like this. And in this case, since we are generating a lower high, we can expect a lower low, and the trend reversal is spotted in the first step. So we can start thinking bearish for this trend. But until I don't have this confirmation, until I don't have, in example, in a couple of days, the confirmation, I cannot say that I'm sure about that, because it could be something like we had here. An attempt failed, a swing failed, and a swing success here. So it could be a swing fail here, but a swing success here on the 16th, Tuesday. So we have to activate sensors to see if the highest point of this price action will be closing up this alarm. And we can also consider that we could add an alarm here, because it's our next very, very, very long-term lower low for this interaction, and we can switch to 4 hours, where generally it's better to put these alarms because it's easier to spot big moves. And consider that this candle, this 4-hour candle, should at least close higher than this level. So if the alarm triggers, we are fine. If it doesn't, then we are not so fine, and we will come back to see the evolution. If we see this kind of evolution down, and we go down until this point, then we can confirm that we have a lower high, lower low, and the trend is reverted. Until that point, we don't have data, but we can trade the fact that most probably we will go again to test, let's say, the range down, this one. So we know that probably we could go to test this upper range if nothing changes. We can also look at the shape of the candles. At the moment it's forming a hammer, but there are still 3 hours 49 for the 4-hour candle. So time to wait. As you have seen, many things can happen in the last seconds. So until that point, we have no data to decide if we are possibly on a downtrend, but at the moment, this is a start. If it's closing this way, this is a possible start of a downtrend. So every concept like this, if you are not doing specific activity during the day and you are going to trade, before entering a trade, do this. Investigate every kind of similar things and similar details, because you don't know in 4 hours what could happen. Now it's dumping. Dumping how much? Look, it dumped here until this point, so it could go this way, but it's our trade. Remember that we need to go here to start doing things. Of course, if we go before a little bit higher, we will know that we will follow the uptrend. At the moment, our strategy could start thinking about these higher points. So this one to retest later, and I'm starting discovering an initial 4-hour possible trend range. And if I want to tune that, I can also consider these resistances, but also these ones, because the previous price action had resistance. One is here, of course, but also here and here. So I could start thinking about these points like supports, and here like another support here, and resistance when rebounding. So this is my initial range after the green, the candle closes on weekly, and I have some range to trade on 4 hours. I can go to 1 hour and search for more and eventually reduce, because here I have one. I could add another line, considering that this is not so strong, because I will go to this one in preference and start reducing the range of the trade in order to find supply demand zones and to start thinking about my trades in a way of ping pong activity of the price. Here I will go up to this point. As you can see, we are reducing the trend range and we are finding something that is like a move. We are preparing a move that we can follow. Of course, it will not work necessarily, but we are finding this kind of opportunity just because we are replicating what happened, and we will go tuning this opportunity. And if the price goes up this line and we have a possible uptrend, we will go moving this rectangle a little bit upper here, or at the resistance of the previous candle here, or looking also at this point like natural resistance and so on, and checking for initially where it reaches. Alarm. Okay, so uptrend. As you can see, there's way more job to do rather than to look at Twitter and stupid things from other people, because now we know we are partially on a higher high, spotted just for one spike, so it's something that they don't want you to see at eye, and it was just on 1 decimal. And now having this higher high to spot our weekly, because it's a weekly trading range, our activity starts from the daily. We have our 2 rectangles, and we know that although the price action was more way up here, so the real range of the trade previously was here up, this does not mean that these spikes are not tradable. So the price went down there, and if we go to 12 hour, we see that the price was there and was also here. So we can play with these kind of activities and see that these initial points are my little boundaries to get trades that are at the moment wider. So let's go for this spike here, not for this point because it's way low, and we should start from this, and let's go reducing the trade range, and let's do this in a similar way, because the frequency of the candles, but we should consider that we should reduce this to the supply demand initial zones, to the support here and resistance there up, and we start thinking about this on 4 hours and verify, and 1 hour. This is an important thing to do for our week. So this is valid until the end of the week. We will see. At the moment, we have also to consider how much will this trend go up. An example, from here to here. Now the move is very, very little, and we could extend this rectangle. But following the first wave, this one, in the case, then we consider that all the trades, important trades, were here up. So we will start focusing on this range, and we will rise up our rectangle from down, but we will consider this as falling points. So this is a support that, if broken down, we will go to test here. Fundamental things that anyone knows really, because you are trading, and these are really stupid concepts to understand, but maybe that sometimes you are forgetting and you are just reading about them, and people say, do that supply demand, and you know how to do that, but you don't. As you can see, I gave you demonstration of interactively searching for something to trade when we wait for the weekly candle, and we go for having price range, price action, previous price action. Never forget about this one, because if you start a short here and you exit here, you have lost all the way down. So when you have trading ranges, you have to believe in your research and your strategy. If you don't believe and exit here because it's going, or let's say here, you enter a short here. Here, first activation of stop loss. If stop loss is turning perfect, you will not exit. Here, you are earning. Now, losing again. And you see that you are at 50% of return of investment for here. If you are an algo trading bot, tuned to optimize money and hyper optimization of strategy, and you consider that your return of investment here is better, 1%, rather than risk to reach this because you will enter another trade safer, then you are a bot. But if you are a human and you don't want to look at the trade until it ends, you will see that the trade here is winning still, but something is happening, and the trend line and everything, but you have to believe in your rectangle that you found earlier, right? Because this is the half. So when we will spot more, probably if the uptrend is confirmed, this orange rectangle will go higher here at this point, and this similar thing will be exactly at this range. So you have to believe that you draw this rectangle and you should move it a little bit up to this line, but believe in this line. So you cannot trade interactively in similar spaces like that, because you will exit. You have to believe in your strategy. Your strategy is to go from here to 1%, 1.5% risk management. You leave the trade there. Like me now, here. I was thinking about Solana. I entered the trade just for joke, and now it's losing. What are the opportunities for this trade? Well, I have to be honest. The market and the week should be bullish. So the moment that Solana is correcting and doing exactly what it does, green, red, green, red, green, red, normal. Could my trade be affected? This is daily time frame. Well, let's see. This is just the first day. In 6 days, my trade could be here, and I could decide to terminate the trade because I'm winning the, let's see, at this point I'm winning 10%. What I want more, I'm looking for the all-time high. Yes, but so I will not close completely the trade, but I will take profit here, 50% for me. and recovering the trade and covering my stop loss, trailing up, so no more losses but just wins. I will move at 25% my trading stop loss, and I will keep trading here, maybe tuning with the ITR in order to avoid being kicked in case of retracement, but going for the all-time high with the pocket filled with 50% earning of my trade and 25 sure here because my stop loss is up. So 75% of the trade, which was a 10%, 7.5 sure win when I have this level. I have to wait for that level, so I will not look at this trade. I think that one interesting thing is that the other day that I was doing paper trading, just one trade was left. Look, we lost $1,000 just because following blindly the Ichimoku strategy. But the trade that I did, because I put a little more in that trade, not just looking at the indicator, is saving me. And it's still here. It's a trade which is standing up from the day of the video. I don't remember when it was, but it's here. This is the trade that we did, and it's in the video on, I think, number 3 or number 4 of the previous Ichimoku strategy videos that are available on the channel. So this trade is still active, entered here, and still super win. Very nice. But I cannot touch the trade because my goal for this trade was not using Ichimoku but using Fibonacci in this case. The trade goal was, let's see where, here, no, more, way more. It was a 0.10417, which is practically maybe the all-time high or not higher, quite an all-time high. So this trade is winning, and it probably will save our accounts because we had $1,000, and this trade only with no leverage is winning $152. Very nice trade. As you can see, nothing is lost. Well, the take profit is not all-time high. I could also go for that, but it will be a spot long holding trading. And this was intended if the trades succeed, and it will be a $300 trade, then we will have recovered from a minus 132 to a positive $150. So we can still trade these accounts for exercise for the next indicator, which will be very bad because following the strategies of just the indicator, just Ichimoku, which is a good way, I didn't add moving averages and similar things, the result is crash. Also, if you are very responsive and responsible in following the 5 main principles and also the 6 and 7 in the scale hidden ones. So at this point, I think that it's enough for today, and we talked about everything.